Hey, Michelle, welcome back. Thank you for joining us again. Today, I would love for you to kind of dive in and talk to us about home insurance and all the different things that are involved in it and the multiple ways people can insure their house and the good and bad of the, what we call, in our world, we call riders or additives, whatever people can add to their insurance. And maybe you could talk about some of the things that are good about them and some of the things that might not be necessary.
Yeah, home insurance is very sort of complex. There are a lot of options. I had a lady ring me the other day buying a house. She says, "How much for home insurance?" I'm like, okay. That's like saying how much to buy a house. So yeah, you really need to hone in, and especially California, different states, different markets have different issues. California, the cost of real estate, or Los Angeles especially, cost of real estate is pretty bananas. So you buy a $2 million house in Santa Monica, it might be a 1940 900 square foot cottage, so right. If you don't know what you're doing and you think, oh, I'm just going to jump online and get myself some home insurance, you'll be like, okay, house coverage A is the crux of the policy. That's how much does it cost to replace your dwelling, and all the other coverages tend to flow off that. They're a percentage. So if you select your coverage A at $2 million, all sorts are wrong with that. I'll tell you what.
What do you mean by dwelling? Like, when someone hears that.
So the worst thing that can happen to your house is that it burns to the ground. So if it burns to the ground, how much is it going to cost to rebuild? And insurance's job is to get you back to the place you were at the time of the loss. Insurance's job is not to build you a bigger, better house. So let's go back to this $2 million, 900 square foot cottage. That's ridiculously $2 million because it's in Santa Monica.
Right.
So if you insure that house for $2 million and it burns to the ground, the claims adjuster is going to work with you to rebuild your 1940s 900 square foot cottage. It's not going to give you a check for $2 million and say, here, shoot for the hills and build what you want. So $2 million is massively overinsured. In fact, most companies, you're not actually even going to be able to write that policy. But so you want to think about, how much is my home worth? They've got all of the quoting tools have this thing called a replacement cost estimator. You key in the details of your home and it helps you estimate the replacement cost. So it's 900 square feet, it's average finishes, or is it luxury finishes, or is it semi-custom? So you do that. And how many bedrooms, how many bathrooms, the detached garage, what kind of roof do you have? You plug all of that in and it spits out a number. Now I work right here in the heart of Los Angeles. I'm in Beverly Hills, and most of my I insure a lot on the west side and in the hills. So building costs are high. So it might spit out, okay, it's going to take $350,000 to replace your house. That might be $125 a square foot. I always round up from that. I don't like to go under $250 a square foot. For a nicer home, maybe even $300, for a premium home, $400, $500, even $600 a square foot. So you use it as a guide, and then you just decide what's your coverage A going to be. So let's say it's going to cost $1 million to replace your home. That's your coverage A. And from there, you get coverage B, C, D, E, and F. And that's a percentage. So I'll be quick about this because it's a bit boring. Coverage B, other structures, that's your garage. That's going to be 10% of the $1 million. So you got 100,000. Coverage C, your personal property. Everything that you would take into the home if you're moving in, or take out if you're moving out, that's your personal property. And that can be 50%, 500,000. But if you need more than that, you can go higher, but you can't go lower.
Okay.
Loss of use. So if there's a fire or a water loss or something that makes you have to move out of your home while it's being fixed, that's going to pay for your additional living expenses, rent and some incidentals, meals and some things. And then liability, which is very important, because if you looked at it, if you listen to any of our car insurance videos, we've talked a lot about liability and how people are always loving to sue and get that payday. So you want to have as high a liability as possible. Many carriers will be 500,000 at the highest. I've found in my experience pre having my own agency, working at some of the big, 1-800 hi, can I please have home insurance? People typically, if they're not engaging with you and caring about you and explaining all of this to you, they're going to give you 100,000 liability, maybe 300, because they're trying to get you the lowest price because they know you're shopping and they just want to get your business. I always give 500,000. It costs $12 a year more, often, maybe a little more, maybe a little less, but to have 500,000 versus 300,000. And this is where people are suing you. So it's a no-brainer.
No.
And then medical expenses, the lowest is 1,000, and someone might be giving you 1,000 just to get that lowest price premium. I always do 5,000, which is usually the highest. Again, it's pennies more. And this is what we call the please don't sue me insurance. So if someone's at your house and they have some kind of accident and they have to go to the hospital and get some injury fixed, you've got 5,000 to play with before they have to sue you. So let's say it's a good friend of yours and their finger gets cut off or whatever. I mean, random stuff happens, or they fall down the stairs or whatever. They don't want to sue you, but it's a legitimate claim. And that's what you have insurance for. If you're my guest and something happens to you, I'm like, oh my God, I have insurance. Let's make a claim. You deserve to not be out of pocket because of something that happened to you at my home. So if they're not looking to sue you and get the personal injury attorney involved and make bank, then they've got that $5,000 available, so they don't then have to go against your liability and sue you and, try to get more. So, I just keep those limits high. It just protects you.
It makes perfect sense. And it, just kind of circle around what we kind of do here at QX Financial, which is provide the value and education. And like we kind of said it at the same time, a no-brainer. Like if something's going to cost me 12 more bucks, but give me hundreds of thousands more dollars of protection, it's a no-brainer. And,
exactly.
And I like that you use that, because that's what we kind of feel here at QX Financial is how can we educate you on the value of what you're paying for, and something you might think is out of reach might be in reach for more affordable than you think of, and can give you the protection that you might have never had.
Yes, yeah. Well, and then that's the basics of home insurance, what we just covered, but there is so much more. So if you're working with someone, if you just ring 1-800, please give me a home quote, and especially if they know you're shopping, so they're going to try to get you the lowest rate, they're going to give you the lowest of everything we just talked about. They're not even going to mention that there are all of these other extras. So one example is the most common causes of loss are water and theft and fire. Fire is the biggest cause of the biggest losses, but water and theft. So your water heater blows up, your dishwasher leaks, you're out of town, you get home and there's $90,000 worth of damage on your wooden floorboards. It's something related to water. There's an additional coverage that's available that's usually, they all have slightly different wording. It's usually called backup of sewer and drain. So if they're offering that as an extra, and insurance policies are notoriously dense and verbose. I mean, nobody ever reads it all. I don't even know what they all say. All it is words, 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 words. And as you're reading it, you're thinking, oh my God, this is just, they're covering their bases. Is anything going to be covered? So you just want to have as much coverage as you can get. So if they're offering you water backup, sewer backup. So let's say the sewer backs up through, actually, I have a story. I had a house in Palm Springs a while back, and I was doing some renovating and walked into the bathroom, and the bathtub had 2 inches of sewer in it. Disgusting.
How's that smell?
So that's the sewer backing up. So if you've got water backup and sewer coverage, it's covered. If you don't, you're in the insurance company like, hey, this just happened, gross. Oh, sorry, that's not covered. There's so many things that aren't covered. So you want to add them in. And that's not dirt cheap. That's not the $12 a year. That can cost you. That maybe it's $150 a year. And maybe you say, you know what, I'd rather keep my premium low so I don't want it. Or you'll say, of course I want that for $10 a month. But you get to choose. If you know about it, you get to choose.
I don't know about you, Melissa, but I'd probably pay someone more than $150 to come clean up 2 inches of crap out of my bathtub.
I know, right?
10 to 15 bucks a month to
Yes.
not worry about an emergency like that. If it happens,
Yeah.
I could sleep very well at night, not thinking twice on. I mean, we're talking 10, 15 bucks again, right? We're talking Netflix. Actually, Netflix is more than that now, right? So we're talking that people spend every day going out to lunch. You know, that's a cheap lunch, right?
Yeah,
You talk
exactly.
that can save your whole house. So
Yeah.
once again,
I mean,
it's
a couple of the other things like that are home equipment breakdown. So for a pretty inexpensive addition, you can have pretty much all your appliances, anything that you turn on and off, or HVAC, water heater, appliances. It can cover those if anything goes wrong. And that often goes hand in hand with service line coverage. Now, I even admit when I was a young agent, I didn't push service line coverage and home equipment that much because, you know, it adds another bit and you're trying to win the business and whatever. But as I've been in it more and I see this service line comes up a lot. So let's say you have that sewer problem. You know, Los Angeles is an old city, lots of old parts of the city, lots of old sewer pipes. If something goes wrong and the city has to come out and dig up your yard to access the sewerage pipe and fix it, they do that, but they don't need to fix your yard. They just leave your yard ripped up where they accessed it. So service line coverage gives you different amounts. It's typically about $10,000. It gives you about $10,000 to remediate your property back to where you were. So, and this happens a lot. I mean, you know, again, sometimes you might decide, oh, I don't mind, I'd rather have the cheaper premium and pay the $10,000 out of pocket if that happens and just hope that it doesn't. Or you might say, oh yeah, I don't have $10,000. If something like that happened and went wrong,
right,
you know, I'd be using the last of my savings to fix my yard. So again, it's strategy. What would you rather do? Would you rather save the premium or would you rather have the coverage when the time comes? And there's no right or wrong answer. I mean, if you got, you know, a good income, a ton of money in the bank, and you take the loan,
you better pay. But building on that service line, now, is that a option under the umbrella policy? Like if you get the umbrella policy, if I'm correct, that covers your auto and your home, is that service line an option in there?
That's a good question because it just shows you as a consumer how you sort of get things wrong. Because what you just asked is not. So
I'm glad I did that because
I like that.
I'm sure other people are doing it.
Exactly. I like that too. So the umbrella policy, that's kind of like saying with the autos, I don't need high insurance because I've got a bomby car. It's not worth anything. It's not related. We're talking about liability. So umbrella is liability. So it's got nothing to do with service line or your house or water or fire or theft. If someone comes to your house, I mean, unfortunately, we see it with, you know, in the news with celebrities because they're high profile. You know, they have a party, and it did happen to one famous rock star guy. A kid drowned in his pool at a party. I mean, it's a disaster. Nobody wants it to happen.
Right.
But that is a claim. And if someone has drowned in your pool, what's the limit of how much they can sue you for? So that's where the umbrella policy comes in. You've got $500,000 on your home if you've got good home insurance, and then you can get your umbrella policy. I mean, if you're pretty affluent and you have a lot of assets, and especially if you're high profile and people think, you know, ooh, this happened at your house, sue you. It's just the insurance company that's going to pay anyway. You know,
Right.
you have that $1 million, 2 million, 3 million, 5 million, whatever. You know, most people, you know, just your average Joe type people like you and me, we can have $1 million, but you know, other people might want more. So that's where that comes when they actually, I have a good example of something that happened. I have a client who is a surgeon and she has a dog, and she went away on vacation with another surgeon who also had a dog, and their dog walker wasn't available. So the dog walker gets her friend from the yoga class to come and take the dogs out. And she was told, don't walk the dogs together because they don't know each other and they're going to be yappy. And also the yoga person thought, I'll save them $10 an hour and I'm not going to go through the company, dogwalking.com. I'm going to just do it on my own. The surgeon lady wouldn't have cared. She wants to go through it properly. But anyway, so she walks the dogs together. She's at the mailbox. She puts the leashes down to get the mail. The dogs run off. They're just little dogs. They're little cute dogs. Forget the pit bull that's going to bite you or whatever. So there's this elderly gentleman walking along. The dogs don't even touch him. They don't even really go near him, but they startle him. They barked. They startled him. He fell over. He hit his head. He's actually fine. He gets up. He goes home. Everyone's taking care of him. He goes home. He fell again later because he has dementia and he wasn't supposed to ever be walking unassisted without a person or a pusher. Right. And then he finds out somehow, I don't know all the details, he finds out that the two owners of these dogs are suddenly he himself has got a new doctor and there's all these different records saying all these different things. And the insurance company settled for $400,000. He got paid out $400,000 because he got startled by a dog when he wasn't supposed to be walking on his own. Now, that's another example of the insurance company paying out because rather than risk going to court, he's a sympathetic person. He's an older man. He legitimately did suffer some injuries. Who knows what a jury would have allocated to him, you know, awarded him, you know, could be millions. So they paid 400.
This is in California?
California.
Sue me state. So, I mean, yeah, you know, the insurance company wants nothing to do with the courtroom. Yeah. They will
and not only, and that's why all the premiums get so pushed up. And, you know, not only that, this poor woman now, I mean, her home is pretty much uninsurable. I mean, she's paying a fortune for a home until that claim is 5 years old. Most companies won't even touch her, but the ones that will touch her will charge her a lot.
Because let a friend take out their dog.
Yeah, I know. It's all, you don't think of these things and then it happens. And
no, Michelle, you hit it on the head. I talk to my friends and family, and as you know, as you see, I'm sharing stories with you. You're sharing stories with me. Unfortunately, I'm old enough now, and I've been through enough experiences that like these things that happen, and we're like, oh, this will never happen to me. Well, they will.
Exactly. And then boom, it's done.
Are you going to be one of those people that like it never happens to me until it's too late?
Yeah.
And thank you for your time and the beautiful information you shared with us. I can't wait to learn some more from you. Hopefully our viewers enjoyed it. And once again, you got to click below to subscribe, like or comment. Michelle's information is also at the bottom where you could click to set up a meeting with her. We thank you for your time and enjoy.